that we've also built up a significant stockpile as well, over 1 year's worth of material to process, which can be processed, during periods of low mining or almost no mining. And, after the mining operation has stopped, we can continue processing for a year, which would be at a very, very low all-in sustaining cost, I believe, even below 700 at that point.
Hello, you're watching Proactive. I'm joined by Thor Exploration's President and CEO, Segun Lawson. Segun, very good to speak with you. And you're out with your second quarter and first half operational and financial results. It looks like a very strong quarter for your Segilola gold mine in Nigeria.
Yes, thanks for having me on. It certainly was a strong quarter. We had this is a very pleasant quarter for us, particularly given the operationally challenging year we had last year and the upgrades which we made in the plant during Q1. And we think, it was worth putting in those hard yards now. And, it's resulted in a quarter where we've poured more gold than we've ever poured before. We've had record profits for the period. And, we stand to continue this performance through to the end of the year at higher prevailing gold prices.
So, Segun, tell us how those upgrades help to improve your performance and how they position you going forward.
I think there are two aspects. The first is that we've improved recoveries above 94%, which is, given if we're, every percent helps, given we're producing, we're processing 1 million tons per annum. So that's the first point. The second point is, during the upgrade, there was a lot of buildup of gold in circuit. We're now looking to draw down on that gold in circuit over the next, 6 to 9 months. So we're actually pouring more gold than we're recovering from the mine at the moment, which is also very good for us.
And all-in sustaining costs of $802 per ounce, which is pretty good when you see a gold price around $2,500 an ounce, Segun.
Yes, we're very pleased with that. We have to say we did feed higher grade material into the mill. So the costs associated with that are much lower. At the current gold prices, it's resulted in a record net profit for us for the quarter. And also, I'd like to add to that we've also built up a significant stockpile as well, over 1 year's worth of material to process, which can be processed, during periods of low mining or almost no mining. And, after the mining operation has stopped, we can continue processing for a year, which would be at a very, very low all-in sustaining cost, I believe, even below 700 at that point. So it's positioned us very well. We are now very well positioned to continue strengthening our balance sheet by paying off our debt, continuing to chip away at our payables. And yeah, look, we couldn't have asked for a better gold price environment for this to happen.
So you mentioned debt, Segun. So you paid a further $7.9 million towards that senior debt facility, and the balance will be paid off by the end of the year, you say?
Yes, so 2 more payments, one at the end of September, one at the end of December. And then, significantly, a few covenants fall away, restrictive covenants fall away with the payment of the debt, even something like returning money to shareholders, which I'm sure a lot of people would like to see. So it puts us in a completely different position going forward.
Maybe take us through some of your exploration activities, Segun. So particularly the near mine exploration around Segilola.
Yeah, look, the biggest priority for us has been to extend this mine life. Like you just said, once the debt's gone, and if all we're looking at is producing gold and generating cash at a low cost. So, having the ability to extend the mine life for every incremental year without any significant capex requirements is highly value accretive to our shareholders. So we focused on that, and we've prioritized things within trucking distance of the mine. And we're actually looking underneath the pit. Now we've opened up the pit and we've been producing for 2.5 years We have a much better geological understanding. We've carried out independent structural studies, and we're chasing some of these high-grade shoots now. Combining these structural studies and the grade control results we have has given us a much better understanding how to design our drill program. So we've started that program. We're looking to release results in September, and we'll look to release material sets of results at the same time, and hopefully, if this mineralization continues, which we haven't closed out, it'll be very exciting for us.
Have you also been progressing your other exploration activities in Senegal and Nigeria?
Yes. So in Senegal, we've got the Douta project, which kind of loses a lot of attention, should I say, because I believe we're strictly rated as a Nigeria single mine producer. But the project in Senegal is significant. It's almost 2 million ounces. We've had a first set of very good drill results from surface. We've completed a 15,000-meter drill program, and we have more results that will be coming in, even this month and through September. And we're looking at a resource update and then a PFS, which we've told the market we're doing this year. So there is a lot of news to come. That's going to be the first time we're able to apply economics and valuation to this project with a PFS. Back of the envelope, even if we discounted the resource we have at the moment, we're already looking at something with a 10-year mine life at 100,000 ounces per year. So we're completing the metallurgy studies. We are waiting for the remainder of the drill results, and the next two steps are a resource upgrade and a study. And I'm personally very excited by that. I think there's a lot of value that's material to the company's valuation that can be unlocked in Senegal.
Well, Segun, I hope you'll keep us updated on any progress on all of those projects. Thank you very much for speaking with us today.
Thank you very much.
That's Thor Exploration's President and CEO, Segun Lawson.